Hey everybody, happy Thursday, June 18th. It's about 1:30 in the afternoon on the West Coast, and it's time for another market update. Well, good news out of the Middle East today. It sounds like President Trump and the President of Iran have signed a peace agreement. Opening, and it's also opening the strait over there. So oil prices, I know, dropped pretty dramatically, pretty quick. So all good news there. Besides, the moral standpoint, obviously we don't want anybody to lose their lives, the bombings and things like that. But on the economic standpoint, this is a big deal because like we talked about, oil has such a big effect on our economy and our prices because of gas prices and things like that. So, with the Fed paying such close attention to inflation, and inflation already being elevated, this war and the rise in gas prices obviously aren't helping there. And we really want inflation to come down because we want the Fed to cut their rate. And when the Fed cuts their rate, doesn't, automatically transfer over to mortgage rates. So Fed cutting the rate by a quarter point doesn't make a mortgage rate a quarter point less, but it definitely has a trickle down effect and definitely would have a positive effect on the economy. So speaking of the Fed, that's the really big piece of news that came out this week is the Fed's most recent meeting ended yesterday, and it was also the first meeting chaired by Kevin Warsh, who's the new Fed chair. So the markets were very curious to see how things would go going into this. Like we talked about, the Fed's the markets already know that what the Fed's going to do. We already knew they were not going to do anything. They were going to keep the rate where it's at, not cut it, not raise it, just keep it where it's at. However, they do release a statement. They I think 4 times a year they release economic projections, which they did yesterday, and then also the Fed chair tends to give a press conference, and the markets were really looking forward to that. So in order there, the statement was pared down quite a bit. I think it's only about a third of the length of the previous statement. So basically, that was the first change that Kevin Warsh made these statements a lot shorter. There was some language taken out that was considered positive by the markets as far as rate direction. So that wasn't really well received. So that was the first, let's say, strike as far as things went yesterday for us. The next thing would have been the economic projections that they release, and all the members, the voting members, put together a little a plot graph that kind of shows where they think rates are going to go, where they think inflation is going to go, and so forth. And it was interesting going into this. News had leaked that the new chair, Kevin Warsh, was not going to do this. He didn't think it was a good thing to do. He didn't think, he thought it was data that wasn't very useful. And he has issues with this, let's say, that the way the Fed does that. So, and that's what ended up happening. He withheld his I guess data. I guess all the other chairs and governors did fill the thing out and released it, and that wasn't well received either because it showed less chances of rate cuts going happening in the future. And it showed inflation staying elevated for longer and things like that. So, their projections were not necessarily positive for where we want things to go. However, it was interesting that the new chair is basically saying that stuff's worthless. They did it because we said we're going to do it, but I'm not going to do it. So that was, let's say, strike two of the markets. They didn't like those projections either. So that's strike two. Third one that came up was the press conference. This is the thing I was, very curious to. I don't generally watch the whole thing of these press conferences, but I did watch this one. First one with Chair Warsh, and just to see how things went. And as I was watching it, I thought the tone was good. I thought he controlled the press conference really well. A lot of the things he said made sense to me. There's going to be a lot of changes, a lot less. In the past we've talked about the Fed kind of drives while looking in the rearview mirror, so they are making decisions for our economy based on old data. Data from last month, the month before, or whatever it may be. Where he made the point that CEOs of corporations are making their decisions based off real time data, and that seems to be the better way to do it. So he said a lot of practical things, all things I liked as I was watching the press conference. But the markets didn't really like his press conference either, and really comes down to a narrative thing. Like me, I kind of expected maybe him to be a little bit more positive about the markets, just because his predecessor was criticized for being so negative by the current president, and so I thought there'd be a little bit of pressure there for him to be, paint things a little bit in a more rosier picture, a little bit more dovish, let's say, a little bit more positive, which the markets would like. He did not do so. He didn't say anything necessarily negative, and again, everything he said, it was very practical and made sense. But the markets, a lot of, let's say, traders, were expecting more positivity out of him, and that kind of had a negative effect on things. And the other thing that he made clear that he didn't want to give any forward guidance, and the markets didn't seem to like that. Which again, I think is a practical thing, a good thing to do, because, like he pointed out, a lot of things change, and it doesn't make sense. Things 6 weeks from now could be different from now, so why make forward projections? But the market seemed to want that guidance, and they didn't get it. So strike three right there. All three of those things the markets didn't like. So that led to sell off in the bond market and not necessarily a good day for mortgage rates. Mortgage rates jumped quite a bit yesterday after this press conference. So not good there. But I will say that today things have recovered a decent amount, not all of it, but they've got some of those losses back. And with that news with Iran, that's starting to mellow things out, and hopefully, yesterday was a little bit of an overreaction in my opinion. So hopefully we gain the rest of those losses back as well. Next thing, some data actually this week, besides all that narrative we just talked about. May pending home sales, again, pretty resilient. You can't see it here, but up 4.17 million sales pace for the month of May. And again, these are pending home sales. So that means that it hasn't closed yet, but it went pending in the month of May, which is interesting because that's pretty real time. And, rates were higher in the month of May. It wasn't a good, necessarily a good month for rates. So the fact that it was up 3.8% month over month and up 4.8% year over year showed a lot of resiliency. So this was actually received pretty well in the real estate market, at least, as showing that, hey, even with rates, even a bad month in rates and everything going on, people still, a lot of pending homes out there. So good to see there. And let's, obviously rates coming down would increase that. Next thing. So average 30-year conventional is at 6.58% today. Last week it was at 6.67. So it came down a little bit. Was up a little bit, higher than this yesterday. It came down a little bit today. It was interesting though. I looked last week, previous to this week, it was 6.58. So, basically went up last week back to where we were the week before. So that's been kind of the story of rates over the last, year. It seems like not a lot of not too much volatility, kind of like staying in little ranges. So good to see it coming down though. Important dates. So upcoming in June, end of June here, June 25th, we have PCE inflation data. Then the beginning of July, you get the BLS jobs report. You get another inflation data. Our first look at that would be June's inflation from CPI on July 14th. And then the Fed meets again July 29th. That would be the next chance they have to either cut rates, raise rates, keep them where they're at. Right now, the markets think they'll keep them where they're at. And another chance for Chairman Warsh to speak and maybe calm the markets or say some positive things. So overall, it's been an interesting week. Like I said, really good about the war, hopefully coming to an end and that, the strait opening up and oil flowing a little more freely. I thought the Fed Chair did a great job, and I'm interested to see what he does and if they make some positive changes. But again, markets didn't necessarily think so. And again, pending home sales are in a good spot. So if anybody needs anything at all, please don't hesitate to reach out and ask. Otherwise, have a great week, everybody. Thanks a lot.